It was a really nice run because we used Thursday's first presented fair value gap as a run to create the high of the day. The market trades down, rallies back up again. The bodies can't overtake the high of Thursday's first presented fair value gap. We start to roll over, and we take this right here and just shift the market structure right there. Once that happens, I'm going to trade inside these 2 price points here. And the first one that it gives me, I'm going to take it and enter a short. I know that we're not going to go back up in the first presented fair value gap because we have a shift in market structure here. So it's kind of like a pseudo model 2022. Went short and then anticipated lower prices a little bit strong. I wanted to see it sell off stronger than this, much more pronounced, much more significant sharpness lower. But it wasn't doing it. It was a little too uniform. You can see a lot of the back and forth in here. Keeping these candlesticks real tight in the previous range. And I had my stop loss just above here. And I'm sure when we were watching it run up there, it was probably one of those things where you're like, oh, he's going to get stopped down. Whoops, I got you again, didn't I? So what that was, this is the order block at the bottom of an inversion fair value gap. That's kind of like a big brick wall. If you didn't write that down, you beautiful piece of information right there, because you're all begging me, teach us how to use stop loss management and trailing stop loss, because all of you want to jam the stop loss in there. You want to lock up all this potential unrealized profit and not even consider the likelihood of the volatility that we're in right now. And you're going to see these types of runs. If you're strangling it, you're not going to give the trade enough room to breathe. And long and short of it is, it just started to dump, and I had an interest in wanting to roll the stop and end up getting out inside of this portion here, which is first presented fair value gap and an inversion fair value gap. When price is up here, give me an opportunity to go short, and adding to it, this here, that candlestick right there, I'm viewing that as my first presented fair value gap. But look what I have immediately after that forming. I have this buy sign and bounce, sell sign efficiency. So I have 2 of them conflicting, and they're nested together. They're both sides. So now I have to do what? If I'm short up here, I'm looking for price to go down into this there. And I want to see this be a draw for a target. While I'm up here shorting, I want to see it draw down into that. And you can see I get in near the low of this range. But once it does that, I have to take a little bit of heat because it may want to retrace out of that. But I don't believe it's going to go up into this area here. And you look at where my stop loss is, it doesn't get to it. It got real close to it, probably scared the shit out of most of you, but you have to know what you're looking for. Now this, because we have this run here, I can take this focus away, and you'll see in the recording, I do that. Now what I want to see is I want to see the market trade lower like it does, and then eventually break through. And because of TradingView's bullshit paper trading account glitches, I couldn't update the stop loss. So I was like, okay, well, I'm just going to be done with it. And we have a wick here that's a discount wick. When we're down here, it's going to trade up into that. This is going to be treated as a breakaway gap. Why? Because we came up when it should have, if it was going to be bullish, it should have just ripped right on through and into this inefficiency here. And this should have resumed as a reclaimed bullish fair value gap if it's bullish. My interpretation was this was the target for the short. This was a bounce in a bearish market. My stop loss guarded me. I knew exactly what I was expected to see. You see me executing with it like that. It starts to sell off. It tries to run out of it a little bit, goes right up to the discount wick here, which is a premium array while we're down here. Like, so in other words, we're at this candlestick's opening. Let me roll over it with this. When this candle's trading down here, that wick is above where we're at. So this is a premium array, even though it's a discount wick because it's the wick underneath the candlestick's body. It's going to trade up into that. And look what it does. It's using it here, here, and the bodies are telling you, I'm only reaching there. It's just doing the damage. But look what it's doing here. It's giving you a swing high. Look at the bodies, not the wicks. See the bodies? High, higher high, lower high. There's your swing high, and then displacement lower. After the third candle closes, immediate takes off to the downside. Rips through the bottom of the inversion fair value gap because it's a bullish fair value gap here. It should not now trade up in the upper half. It couldn't even do anything to get back into it. And it just kept wilting lower and lower and lower into a fair value gap here. Institutional order for entry drill. Right there. Sells off. Same thing. Look at the bodies. High. Higher high. Lower high. Swing high. Drops aggressively. Trades down. Falls short of this octant level. Trades up here. Falls short of that octant level. And then breaks lower. We want to start seeing it fail to touch these gradient levels. It doesn't touch it here. Falls through. Touches it here. Touches it here. Breaks out of it. Once it goes below here, that's a done. Like, you're done. Like, you don't need to do anything more. But if we were in a market that was not seeing so much manipulation, this is where you could just let it stay with the runner and see how much you can get out of it for the rest of the day. But look what it does the rest of the session, in the PM session. Look what it's doing. Meandering around. Nobody wants to trade in this. None of this stuff is exciting to anyone else. And we get up back inside of it here. Look, that's using that level. The low of it. The white box is Monday's regular trading hours opening range gap. New week opening gap as well. And then we have price just meandering around in no man's land there. But it closes on the low of the day. Beautiful, isn't it? Isn't that beautiful?